Have you ever wondered how mortgage interest rates are determined? We're going to talk about that in my 2019 rate forecast, and we're getting started right now. What's going on? I'm Emmett Dempsey, mortgage advisor with Geneva Financial here in beautiful Port St. Lucie, Florida, and welcome to another mortgage and home buying tip. If this is your first time here and you want to learn more about mortgages or the home buying process in general, go ahead and subscribe to my channel and ring that bell so you don't miss anything. Okay, Happy New Year. It's the beginning of January 2019. Everyone's shaking off their pumpkin spice syndrome, getting back to work, kids getting back to school. And maybe you're looking to buy a house. When I talk to clients looking to buy, refinance, of course the question I'm asked is, how is my mortgage rate determined? Well, the answer to that has many different answers. I'll break it down into two main categories, okay? You and your property, or what you can control, and two, the economy and the bond market and their yields, or what's not in your control. The factors for you and your property, many of you may know. They are your FICO score. Of course, the higher your FICO score equals better rates. Loan amount, generally larger loans are better rates. FHA and VA usually have better rates because they're guarantees, especially for lower FICO scores. Loan duration, 15-year loans have lower rates than 30-year loans. Fixing a rate for 3 decades has some risk to it, so they raise the rate. Housing type, single-family homes, generally lower rates than condos. They're 2 to 4 unit properties. And more of them are readily bought and sold. That's why the rates are lower. Purchase transactions are generally lower rates because it's less risk than a cash out. It's all about risk. Down payment, LTV, the more money you put down, less risk to the lender. Therefore, it's a lower rate. If you're buying a primary residence, it's a lower rate as opposed to investment property. Paying points. If you pay points, of course, your rate will be lower. 1 point is 1% of the loan amount in exchange for a lower rate. The factors not in your control are the economy and the bond market, which are the main factors that make up the mortgage rates and the direction that they rise and fall. For the economy, we are in the mortgage business watch things like unemployment rates, wage growth, GDP growth, etc. to determine general economic conditions. In general, if the economy is doing well, mortgage rates will rise like we saw in 2018. When the economy is doing poorly, rates tend to drop. The main reason for that is due to flows of money in and out of the bond market. More specifically, the 10-year Treasury and the mortgage-backed security market. In general, the yield on the 10-year Treasury will generally determine where mortgage interest rates are. Why the 10 years? Well, even though most mortgages are for 30 years, most people move every 7 years or so. So that's why we use the 10-year. The MBS market is where your mortgage will generally end up. Most companies, even my company, we don't service your mortgage. We will sell it to somebody else. And then aggregators aggregate all those mortgages into a pool of mortgages called mortgage-backed securities. So they're bought and sold every day, just like the 10-year Treasury. The 10-year Treasuries are guaranteed by the federal government. MBSs are not. So the willingness of investors to buy these mortgages, and as they flow in and out, that's what's going to drive their yields up and down. For instance, when the stock market starts to go down, investors will sell stocks and buy bonds, and thus drive down yields. When stocks rally, money comes out of bonds, and markets are driving up yields. So to sum up, the factors that determine your mortgage rate are factors that you can control, like your FICO score, how much you put down, and items you can't control, like the bond market and mortgage-backed securities. Next, I want to talk about, in general, the 2019 mortgage rate direction. Rates today in January 2019 are about 4.8 to 5% or so. That's about 5/8 of a point higher than they were this time last year. I personally expect that rates are going to go up a little bit, although not as fast as they did in 2018. I think by the end of the year, they're going to be solidly above 5%, maybe go to the max about 5.5 or so. So I hope that was helpful. And if you want a personalized rate quote, go to dempseymortgage.com, fill out your info, give me a call. And again, as always, you want to learn more about mortgages or the home buying process in general, go ahead and subscribe to my channel, ring that bell so you don't miss anything. Thank you so much for watching, and I'll see you on the next one.